Hello and welcome to another daily Forex market review. My name is Schimming, and this review is for Thursday, February 7th. Now I'm going to start again on my currency strength index, keeping in mind that it's an advanced tool that disassembles every currency pair and isolates the individual currencies to show you their strength and or weakness against each of the major currencies in the field. This allows you to track the pairs that have the greatest momentum and potential. And this way we're going to focus on the best situations on the day and ultimately place trades where both currencies are moving in the desired direction of my trade. It is an enhanced decision-making tool. It will help you hunt for better trading opportunities. It can confirm chart patterns and trends that you're already seeing. And the consolidated, simple bird's eye view gives you a serious advantage against the market and other traders. It is looking at the largest global liquidity pool, looking at electronic transactions done by nearly 80 brokers throughout the world, not just one broker. We also give you direct ECN access to trade into that massive liquidity pool, so there's two benefits here. On the screen, what you should be noticing, and you can zoom in and go to the top left-hand corner so you can identify the color coding of all 8 currencies in the field. I'm going to point out the majors that you need to notice today and why we would be looking at this chart. It is the starting point each time you go to trade. Every time you log onto your software, come into my trading room, this is the first thing that we're identifying. Which currencies are moving up, which currencies are moving down, which currencies aren't moving, and how does that affect the pairs that you prefer to trade? Regardless whether I'm going long or short, I need one currency of that pair to go up. I need one currency of the pair to go down. That is one of the substantial benefits of trading currencies. One of them is going to typically carry the weight of the trade, but I need to make sure the other one is not working against me. You should have a short list of currency pairs that you prefer to focus on, that you prefer to trade, where you're most familiar and where you've had the greatest success. But on any given day, all of the pairs that you prefer to trade aren't necessarily in play. So your short list should become your focus list based on this view. Look at the pound in pink. The pound is trending to the upside. It's been trending to the upside since before the London Open. It's been pretty consistent. If you look at the yen, the yen's in blue. The yen's been very volatile during the Asian session, moving up and started trending down before the London Open and through the London markets. New York came around, it caught fire again and moved up, but now it has leveled off and lost its momentum. Understandable based on time of day. The dollar is relatively flat. The dollar's in green for the greenback. It's been moving relatively sideways, but once the New York markets open, it caught fire, and you can see how the dollar moved to the upside as well. You should also be noticing that the dollar and the yen, for the most part, have traded together today, and the correlation between those two is ideal. To the downside, look at the 3 to the downside. In red, the euro. It should stand out, that's why it's in red. It's an opposing currency for many of the other currencies in the field, and a lot of euro trades are available. Euro dollar, euro yen, euro Swiss. This is an outstanding currency to look at. Look at the Swiss in white. The Swiss are neutral, so we painted it white. And then you have the New Zealand in gray. Now the New Zealand's actually been the most consistent to the downside over the last 20 hours. But too bad those pairs don't have a greater trading range. For those who trade it, you know that it's been a good pair today. So what does this mean to me? The CAD, the last one, the only one I'm not mentioning is in yellow, and that's the CAD, and it's been relatively sideways today. Now, part of this is also average trading range. The desirability of a pair is going to be how well it trades and how much trading range is available in any given day. So again, pound to the upside and Swiss to the downside. That means the pound Swiss has been a great long opportunity throughout the day. Swiss to the downside and dollar to the upside. So that means the dollar Swiss has been a great long trade on the day. The euro to the downside and the dollar and the yen both to the upside. Euro dollar, euro yen, both short trades on the day. And there's others. There's other pairs here that you could combine and make some trades. But those would be the four standout pairs based on trading range, volatility, opportunities, entry, identification, and so forth. So let's take a look at this a little bit more detailed. And I am going to focus today on that euro yen. On the screen, really briefly, here is looking at the day of those four key pairs. Euro dollar here in the top left-hand corner. You can see that it's been a short trade all day. We've been very consistent to the downside. I placed a short trade on that early today at 135.47. Wish I could say that I made more pips than I did, considering how far it actually moved. You look at the euro yen. It's also been very consistent to the downside. Matter of fact, I don't even have the whole day on there. You can see because the pivot hasn't, you don't see the start of the pivot. But point made, we're going to look at that one a little bit more detail anyway. And then the pound Swiss to the upside, as I said, and that Swiss yen to the downside. Both two outstanding pairs on the day considering the movement, although we are in the late afternoon and we are seeing a lot of leveling off in the pairs for now. Now let's take a much more detailed view and step back and look at the yen, the euro yen. Now this has been kind of one of my focus pairs this year, largely in fact because the yen, the euro yen and the pound yen have the greatest average trading range. They're the only two pairs in the marketplace that have been able to see average ranges break the 200 barrier. We haven't seen that in quite some time. Euro yen is actually outpacing pound yen right now for average trading range, and the setup here I think is outstanding. Now this is looking back to November 1st. I'm not going to stay on this view. I just want to remind you, this thing's been, go back 6 months, this thing has just made an unrelentless move to the upside. There's been some big drawbacks, there's been some good consolidations, and consolidations are healthy. They give us the opportunity to let the pair settle down and renew its ability to move up and or down. In this case, it's just been going up and up and up. It's consolidations and lifting more, consolidations and lifting more. It's been an exciting pair, but more so on the year, more so in 2013. Now let's advance and bring it forward. Let's get up to the last couple of weeks. And you'll see I had that trend line back there from November, but I also am looking at a trend line. That's why there's two trend lines on here. I've got the second one that's from last week to this week. Really focusing on what it has been doing for the last couple of weeks, because I've been looking at and noticing that we've been seeing, you know, this huge pull down on this far left hand side of the chart. You know, there's some naysayers out there. I've been telling you that the pair is in transition. Transition means there's a collision of buyers and sellers. That's what creates tops and bottoms of the market. Support and resistance in the market is all created because it's a massive collision of buyers and sellers. We trend one way or the other when you have more buyers than sellers or more sellers than buyers. When they start to equalize, that's where support and resistance comes in tops and bottoms in the market. Now, tops and bottoms are hard to identify. Matter of fact, it's like catching a falling knife. Traders that are telling you that they're trading from the top and buying at the bottom and vice versa, they're lying to you, because picking tops and bottoms is a dangerous game, one that actually costs most traders their livelihood. What you should notice when a pair is transitioning, that something's getting ready to give up. Are the buyers going to win and it's going to keep going higher? Or are the sellers going to outpace and keep going lower? How do we identify that, and how do we take advantage of that? Clearly, with the drawbacks that we've seen over the last 5 days, this pair is possibly finding a top. I've been alluding to that. I thought a pullback would actually happen quicker, but I've also suggested to you, if it breaks this range, it's still long. If it breaks this range, it is a short. Well, today it may have taken a great step into seeing what I would consider is a healthy pullback. And here's why. Look at the trend line, the shorter term trend line I placed on the chart. If you trended this pair over the last 2 weeks, and keep in mind some traders don't look further back than 2 days, let alone 2 weeks, let alone the 4-month view we just gave or the 6-month view that I did last week. You need to start at a broad view and work your way in. Take the biggest picture and then come in closer for the detail, as we're doing right here. You will notice that if I trended it just from the swing low from last week to where we are this week, we've broken trend. Now, I've also marked 2 substantial ranges of support and resistance. I've left the top of it open. The 127 range has also been a very toppy situation for this pair. So I didn't mark it because I want that to stay open to give you the ability to view this and imagine this thing even going higher. But I put the support and resistance lines at approximately 126 and 124 because I also want you to see the potential of it pulling back and what could happen and what seems to be happening right now. Now, since this is Thursday, we're going to Friday. Will Friday be the day that really changes the course of this pair? I don't know. Possible. Fridays have improved, but more than likely, next week really excites me because something has to give. So here's the things that I've noticed beyond the trendline break. The fact is, when it got up to 127, and for those who trade this pair, you know the 127 has been very, very difficult for this pair. We get to this marker right here, and you can see it got to 126.96. Bumped right up against the 127 mark. It pulled back dramatically, went from 127 all the way back down to 124. A 300 pip pullback. Moved right back up to it, and this also becomes a warning. And you notice 126 was resistance here. 126 was support here. 126 was resistance here. 126 was resistance again. 126 was support, the range, give or take, pips either side. 126 support in here, and here, and here, and now it's support and resistance again. The 126 range has actually become more important than what's been happening above it. The 127, as it's made these moves, this really became the alert this week, or the confirmation, I should say, when it failed to break that swing high from last week. This was the trade on the 1st, on non-farm payroll. This was the trade on Monday, and the high move that it made. It did pull back. It pulled back and violated that 126 range a little bit and went higher. So you could say, hey, well, it really wasn't done doing this move. This is a 30 pip view. Those are some very, very big moves inside there. I have it consolidated because I'm taking a very broad stroke to show this to you. We can look at the zone really briefly when I end the video. Then you'll notice it made its biggest move. This is 127.70. This is the lead. If it was going to go, this was its chance to go. And so those who traded like, couldn't break 127, it can't break, can do anything it wants. It went to 127.70, but it still failed. And it came off of that and came back to where? That 126 range. Again, the 126 range has become more important than the 127 range that it's trying to break and trade above. It hasn't been able to get above that range and stay there. What would be the indication of it staying above 127? Is if it proved it, what I say last week, it would prove it by converting the resistance into support. Meaning it has to get above it, pull back to it, and trade off of it. It definitely hasn't been able to do that like it has this 126 and 124 range. Look, 124 was resistance here, it was support here. You look at 127, or 126 was resistance here, support, resistance, support, resistance, support, and resistance again. That is substantial. So today, what has happened? Not only did it double top up here, but you have a 1, 2, 3 pattern. I probably should have drawn that on the chart for you, and we can do it really quickly while I talk, because that becomes a pretty substantial situation where it has gone up to 127.70, pulled back to that 126 level, bobbled around there, sat on here, and struggled at the 126 level, and then has gone back up again, failed again to set a new high, and now has broken below 126. The fact that it got back below 126, struggled and used what was support as a resistance line, pulled away from it, this is the caveat that could be a substantial pullback. And the reason that's important is, A, I need to identify that and take advantage of it. B, I need to be aware that it's happened. For those of you that are sitting going, oh, this is a long, this is a long. The trend is your friend, and this thing has been in an uptrend. But that trend is only your friend until it bends. And now, it's bending. So if I take the short-term trend line, again, I've got two different trend lines on here. If I take the trend line back from November, I'm coming down to kiss it. If I'm taking the trend line over the last 2 weeks, I've already broken it. And I've broken it with a triple top, a 1, 2, 3 pattern, if you will. You could call it a head and shoulders, you could call it a double or a triple. Regardless, it's found a top, at least short term. This is not to say that it can't go higher. It absolutely can. But what about it going lower? What about identifying the fact that it may be backing off of that, and you could be early in that identification and make maximum advantage? What would be ideal from here? Let's just keep blowing this up and advance this a little bit, and then I'll jump over to a little shorter term detailed chart and we'll wrap this up. What would be ideal is to go back up to 126. Now if I put the pivots on here and I put my zones on here, really it's about 127, 125.80. I really would like to see it stay below there. You know, the yen pairs dig into 20 and 80. It's the 80-20 rule, as I say with the yen pairs. So really, I don't even want it to get back to 126. I want buyers to stay in there. I want them to come back in there, and I want them to say, no, 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 you're not getting there. I'd like to see it stay below the 125.80 range, quite frankly, and then make its way back down. Where's it going if it breaks down? Well, 124. It could stop at 125. 125 has also produced some support and resistance in these last 2 weeks. You have support at 125 here when it was making its initial move to the upside, and you have 125 being resistance here when it was making its first retreat from the 127 mark. So that 125, I don't think it can just blast right through it, but it probably won't have too much of a struggle there, although that's what it's doing right now. It's found a little happy home at 120, the low 25 range. It was just below it, now it's just above it, so 125 is improving to be a little bit of support. So the first stop would maybe be back below 125. I think it's pretty easy to see getting down to 124 would also be ideal and possible. If it can break 124, then we're talking about a 123 or even lower. We're talking about a very substantial pullback if that in fact happens. I want you to be aware of it. I want you to be able to take advantage of it, and I don't want you trading in the wrong direction. So really, the long should be off until we look and are able to see the pair back over 126. It would be exciting to see it approaching 127 again. As a matter of fact, if it can get back up there after this, then I would suggest to you that the buyers are probably winning the war and they're going to take it higher again. How do I identify this? Well, it's going to be those key levels. Over 126, approach 127, yes. Get pretty enthusiastic and bullish about this pair. How am I going to identify that? Click on and utilize my CCYX. That's the best tool possible to look on a daily basis of which currency has the greatest amount of strength and or weakness. So we're looking, is the yen strong or is it weak today? What if it gets and stays below this 126 level? What if we see it taking out this low and moving towards 124? I'm already ready to make shorts. We've been shorting this pair today. We've been shorting the pound yen today. We've been looking for the shorting opportunities in the market today because traders in my group know this thing feels and looks toppy. Now, if we look at the detailed view, let's do zoom in and look at the little bit more detail and just go to my zone chart. The zone chart is a great configuration of my design. Been using it for almost 2 decades, and what it is doing is this simple little moving average setup of the specific ranges are giving you a channel or the zone, if you will, that lets you know the pair has moved up in a downtrend enough to be worthy of consideration for a new short, but not so much that I should be afraid of it. If it's an uptrend, it'd be just the opposite. It's pulled back in the downtrend enough to be worthy of a new trade consideration, but not so much that I have to be afraid of it. The zone, the range between the shortest average of the zone and the longest average of that zone, becomes that sweet spot, the ideal range. You can also see that pivot level I was talking to. It's S1. I don't want it to break S1. You can see the top of the selling zone. When this is a selling zone present, obviously pair price is below the averages for the most part. It's inside of them right now. That is a healthy situation. But it's this S1 that I don't want to break, which is currently is at 125.78. Now while I'm talking, they're going to adjust, they're going to change. But this is something that we need to be paying attention to. And this is a great setup opportunity here. You can see that it's slightly overbought with the ability to trade lower. I love this. It's been needing a healthy pullback for quite some time. And this is why we wanted to review this pair. We'll be following up on it tomorrow and going into next week. I hope you take advantage. You know what? Why don't you just come in the room and trade with me? Do it firsthand and watch what we're doing with this pair and others. How we're utilizing the CCYX on a daily basis and how and why we are such consistent traders using pure price technology. just send me an email. It's on this YouTube page at derekschimming@gmail.com. You've got an open invite to come in and trade with me. If you want to stay with us long term, we'd love to have you. My name's Derek Schimming. You guys have a great day trading.